All right, good morning. It is Monday, February the 2nd, 2026. Nice, cold morning here in Charleston. Over the weekend, we actually got some snow down here, which doesn't happen very much. So we got, I don't know, about an inch of snow, which is fun. Probably could have used another inch or two. My kids are out there trying to make snowballs and really just like pulling up more leaves than snow. Yeah. So I don't know. My daughter actually worked really hard and managed to make not a snowman, but you could say maybe a third of what was hopefully going to be a snowman. She made a nice little snowball, maybe 2 feet in diameter, that she was working on for 2 or 3 hours. So yeah, it's fun. It's always fun to get kind of a change of pace for a short time. So yeah, we hope you had a nice weekend as well. A lot to unpack in markets last week. Stocks and bonds were relatively unchanged, so nothing too excited for the broader market there. But there were a number of other interesting pieces. All right, so I want to start with the new Fed chair nominee, Kevin Warsh. All right, so anytime you have a new Fed chair nominee, just because it has a political component to it, because the president nominates and the nominee needs to get through the Senate. One thing you don't want to do to get your insights would be go to like a CNBC or a Fox News because or a Fox Business, right? Because you go somewhere like that, and obviously you're going to have a political slant to those opinions. So I'd always encourage you instead to go, find just. And it's harder and harder to do these days, but it's just an independent, really just going to professionals that are actually in the markets, or better yet, really the best way to look at a nominee like that is look at the market reaction itself. Okay, so that's something we're going to dig into here in a minute, but from what I've gathered, again, just looking at more independent professionals as far as economies and markets go, from what I understand, that this seems like a pretty solid pick that should get through the Senate somewhat easily. For those, I know there were a segment of a lot of people really that were a little bit concerned about the Fed losing its independence. Okay, so this Fed pick should ease some of those concerns. They should be tempered down a bit. While Warsh will be more dovish with rates, just his history of being a Federal Reserve board member from I want to say it was kind of the late, like something like 2006 to 11. Certainly respecting the Fed committee and their process, and really just looking at the market itself. So the one tell where you just from market participants and kind of easing their concerns was you saw the dollar get much stronger after that pick. All right, so the strong dollar, and on that you're going to have this little bit of a domino effect. But before we go there, just a couple other viewpoints that the nominee has. He feels that the Fed's balance sheet is too big. Okay, so one thing he's put out in prior academic work is just he's a supporter of he thinks you could have lower interest rates to help stimulate the economy, but reduce the Fed's balance sheet. Okay, so he thinks that would be like a net neutral inflationary effect while stimulating growth. So it's something to look at there. He also feels the Fed's inflation forecast, just their methodology and how they do that, is outdated, which I think we can all agree on. That's a big reason we got into the inflation mess of 2022. The Fed was really looking at a bunch of lagging indicators, which that's maybe a video for another day. But so much stronger dollar into the week's close, which of course that's going to be a headwind for commodities, anything commodities, and unfortunately, The stronger dollar came at a time when we saw a bunch of retail investors just piling into gold and silver, and I've been a student of markets now for longer than 2 decades, and while the asset classes and the stocks change, just the aggregate human biases and behavior do not. And while we never want to time markets, anytime you have an asset class, so just looking at gold and silver, but anytime you have an asset class that has underperformed for a really long time, okay, so as is the case with gold and silver, right? They went, both commodities went from 2011 to 2024, right? So longer than a decade of zero gains. Okay, so silver all the way until 2025. But so you have a 13-14 year period of an asset that has a 0% return. Okay, same time the markets quadrupled or so in that same time. So the asset class has done nothing 13-14 years, which means it's really under-owned, right? Because as investors, most investors just want to own things that are going up all the time. All right, so you have an asset class that's under-owned, all right, and then you have a 12-month period where it's doing really, really well, right? And some of that's on what was weakening dollar for a little bit there. And then you get the news stations piling on. So it was on CNBC a bunch. You see the retail investors piling in. We had a couple clients last week reaching out. Should we buy gold at $5,600 an ounce? I want to say it was at one point. And then boom. It's that momentum stops. What was it? The Fed nominee. I think that was a big part of it. But you have the dollar strengthen. There was a report that President Trump was in talks with Iran. So like some de-escalating geopolitical discussion as well. And boom, just in a couple days, you see gold reverse lower $1,000 an ounce. Silver move from 120 to 80. Okay, I mean these are big moves. And just bottom line, it just kind of goes to show you almost never want to be reactionary to markets, right? So if you're making a change post a big move, that is rarely going to work out well. Far better approach, in my opinion, is have target asset allocations in place, and then have a systematic way of rebalancing, right? Because if you're rebalancing, it's a systematic way. If there's an underloved asset that might be falling, under a value, maybe it should be trading higher. So if that asset's going down, you're going to systematically be buying more of it, right, at a lower price. And so just having a process like that a process like that, it's going to help. As markets are inevitably very volatile, it gives you a chance to participate on the upside if you're ahead of it, right? So this video is probably a bit longer than it needed to be, but just a really interesting week in markets with the Fed nominee, and then just a ton of volatility around commodities. I didn't even touch on cryptocurrencies, but you can look into those on your own. It hasn't been a great few months for those either. So anyway, looking forward to reviews here, just a couple weeks out. So again, do us a favor of signing up for those ahead of time if you have a minute, and we hope you have a great week. Thanks.